Everyone is asking the same question. Is the housing market about to crash? We see the headlines everywhere. Prices are too high. Interest rates are killing buyers. Inventory is piling up. It feels just like 2008 all over again, doesn't it? But here's the scary part. What if the crash never comes? If you are waiting for home prices to drop by 20 or 30%, you might be making a huge mistake. But if you buy now, you could be catching a falling knife. In this video, we're looking at the real data for late 2025 and 2026 to answer one simple question. Should you buy now or wait for the crash? First, let's look at why a crash is unlikely. It is called the lock-in effect. Over 80% of current homeowners in America have a mortgage rate below 5%. Many are sitting on 3% rates from a few years ago. Think about it. If you have a 3% mortgage, why would you sell your house just to buy a new one at 6 or 7%? You wouldn't. This means millions of homes are not coming onto the market. Low supply keeps prices high. As long as inventory stays low, a massive price crash is mathematically impossible in most areas. However, we cannot ignore the bear case. Houses are more unaffordable now than they have been in decades. The average mortgage payment has almost doubled in the last 4 years. Wages have not doubled. In states like Florida and Texas, we are starting to see inventory pile up. Why? Because insurance costs and property taxes are skyrocketing. In these specific regions, we are seeing price cuts. So, the crash might not be national, but it could be regional. So what happens in 2026? The Federal Reserve has signaled that rates might stabilize or come down slightly. Here is the trap. If rates drop to 5.5%, millions of buyers who are waiting on the sidelines will flood the market. What happens when demand explodes but supply is low? Prices go up, not down. If you are waiting for rates to drop to save money, you might end up paying more for the house price itself. So, here's the verdict. We are likely not facing a 2008-style crash. We are facing a stagnation where prices stay flat for a while. If you are buying a home to live in for 10 years, don't try to time the market. As the saying goes, marry the house and date the rate. You can refinance later if rates drop. But if you're an investor looking for a quick flip, be very, very careful. What do you think? Are prices going to crash or skyrocket? Let me know in the comments below.